Charlie here, and in today's video I'm going to cover the price action candlestick patterns number 3, the Harami. Now I did do this video before and there was kind of a crazy noise in the background, so I'm going to go ahead and redo that for you guys, and hopefully that'll help out. As always, we must start with a disclaimer. Feel free to pause the video to read through the entire disclaimer, but when trading any financial asset, there's a possibility you may sustain a partial or total loss of your investment funds. As a result, it is advised you should never invest with or trade upon money which you cannot afford to lose through this manner of trading. Trading involves a real risk of loss, and past performance does not ensure future results. So let's get started. What is the Harami? The Harami helps to define the end of a retracement or muted reversal. The word Harami means pregnant in Old Japanese. When you see a Harami pattern, the first candlestick is the mother and the second is the baby or child. If the candlestick is not entirely within the body of the mother, it is not a true Harami pattern. Typically, in a bullish Harami, the first bar closes lower than its open price, while the second bar closes higher. With a bearish Harami, the first bar closes higher than it opens, while the second bar closes lower. And just a special note, some traders also refer to the Harami as the inside bar. So you may have heard this before. So how do we trade it? The Harami is usually traded best when the market is in a defined trend. For example, if the market has been in a downtrend, the appearance of the Harami could be an indication of the continuation of the trend. In a bullish Harami, we would buy or go long after the completion of the second candle. In a bearish Harami, we would sell or go short after the completion of the second candle. In this example over here, we have our mother candle, and then we have our child or baby. The body is fully within the mother, and then we have a little bit of resistance happening here. We would enter slightly below, and during this candle it broke, obviously, so you would have gone into the trade, but your stop loss would not have been hit because you would set your stop loss slightly above previous resistance, which would be right around there, okay, because we have that little spike up, okay, and then here we have the continuation of the trend. So here's some examples. In the example to the right, we see an example of the Harami following a defined downtrend. Our expectation is that there will be a continuation of the trend. At this point, you would enter just below the child following its full formation, and our stop loss would be just above the high of the mother candle. Here's our mother candle. Here's our child. Our stop loss will be just above that high, so right around there. And if you have opted into either of the price action series, then you were able to get this template for free. So this kind of gives you previous support and resistance levels, so you don't even really have to try to figure it out, okay? If you're new to trading, or if it's something that you just haven't been very confident with, you know, definitely opt into that and get your free template. Everything is free, you don't have to pay for any of it, so just check it out, and hopefully it'll help you guys out. So as you can see, price came down, came right back up to right around that same high, and then we had the full continuation of the trend. In this example, we see two examples of the Harami following a defined uptrend. Our expectation is that there will be a continuation of the trend. At this point, we would enter just above the child candle following its full formation. Our stop loss would be just below the low of the mother candle. So here's our uptrend. Okay. Right here, we retrace down, and here's the mother, and here's the child. The body is fully within the body of we would enter slightly above, and as you can see, we have our continuation of the trend here. We also have another one that's set up. Here's our retracement down. Here's the mother. Here's the child. The child's body is fully within the mother's body, and you would enter slightly above there, or above the child. And right here, we have our continuation of the trend. We have one more example, and this example is following a defined uptrend. Our expectation is that there will be a continuation of the trend. At this point, we would enter just above the child, following its full formation. Our stop loss would be just below the low of the mother candle. So, here's our uptrend. Here's our retracement down. Here is the mother. And here's the child. The child's body is fully within the mother's body. Our stop loss would be slightly below that mother. And our entry would be slightly above the child. Now, you can either enter above the child, the full candle, or you can enter slightly above the body. That's something you'll want to figure out what's best for you. Both seem to be very effective, so most of the time I just enter slightly above the actual body itself, but it also depends on some support resistance levels, previous ones, so I recommend checking that out for yourself, doing some back testing on this, because it's easy to spot and see what is the best for your style of trading. Okay, so here we have a little bit, price kind of comes down, and then we start to go into profit here. Well, here, and continues up, comes down, but does not hit our stop loss, and continues up higher. Okay. So, in my next lesson, I will be covering the engulfing candlestick pattern, and I will see you guys then.